Hey guys, welcome to another episode of the weekly market overview. In this episode, I'm not going to talk about any specific altcoins because a lot has happened. There's too much to talk about, so I'm just going to talk about the market in general. Let's dive straight into it. So, last week, for a moment, the market was looking decent actually, and then all of a sudden, as you all know, the SEC started suing everyone, sued Coinbase, sued Binance, and they called basically every relevant cryptocurrency an illegal security. So things, of course, quickly turned south. It's very unfortunate. That's not something that you can read in the charts, of course, but it is what it is. So let's reassess. First, some technicals. We're looking at Bitcoin right now. As I've mentioned a couple times before, also in the previous weekly market overview, this 25k level is a very important key support level. We could see, based on just the technical structure, 25k was the top of this mega range here on the higher time frame, and it's now for the first time actually that we're testing this as support, and it's currently holding. We could also see, based on the order book, that there was some passive demand there. So we expected this to be support. It is currently holding as support. We can see, based on the order books, that between 24k, 25k, there is a decent passive bid. We also have green deltas everywhere, so in this range we have more bids than sells at the moment. However, I'll be honest, liquidity isn't great right now. In recent times, mostly because of regulatory uncertainty, a lot of funds, a lot of market makers have disappeared. So even though there is some bid in the books right now, there's not that much, to be honest. Back to the technicals. So 25k, very important that this holds. If we dip below, the only thing that I would like to see is a sharp, fast sell-off that immediately gets bought up, and then we waste no time to reclaim 25k. Anything else, if it just drizzles slowly below and closes below 25k, that's really bad in my opinion. You don't want to see that if you're a bull. The bottom of this previous range that we were in, 26,500, is currently the first area of resistance. That's significant on the daily chart. If we reclaim 26.5, then we can start looking at the top of the range again, which is 30k, a very strong, very significant resistance level. So yeah, those are the technicals. We took a look at the order books. Let's take a look at funding rates. Funding rates across the board have completely reset, which is good. So if you look at Binance, for example, we have a lot of negative funding rates, and then the highest funding rate is basically baseline. We have this one outlier, which isn't relevant. Pretty much every other funding rate is at baseline, so we had a good flush. There's not a lot of froth in the market right now. That doesn't mean that we'll immediately start pumping though, but that's good. A lot of the degeneracy has been flushed out of the market. Let's take a look at open interest. So on this little drop that we recently had yesterday, Wednesday, I believe, open interest got nuked for a moment, but then immediately it started skyrocketing again, and it's actually currently higher than before the nuke happened in price. So let's take a look at what was happening here. Are these mostly directional shorts or longs? Initially, this open interest buildup was mostly dominated by directional shorts who were betting on the market continuing to break down, which you can see based on the fact that this OI buildup shoved funding negative. So that's a pretty significant sign that these were directional shorts. On the three most important exchanges, I talked about this last video, Binance, Bybit, OKX, those are currently the biggest derivatives exchanges. On all three, funding went negative, OI went up, right? Directional shorts. And we can see currently that some of these shorts are getting squeezed, right? However, on this second push in open interest, this push shoved open interest positive again on all three exchanges, Binance, Bybit, OKX. So we can assume that this entire open interest buildup is actually a mixed bag of both directional shorts and longs. However, currently, and we can also see it based on liquidations right here, right? We see a bunch of short liquidations, so that's further confirmation that these are indeed shorts that are currently getting squeezed. What I think could happen lower time frame is a little dip and then continued move up. and then further depletion of open interest until we get somewhere back around this area right here. And that's probably where this move on the lower time frame ends. And then we'll have to reassess. But lower time frame, short term, that's what I expect. So let's take a look at significant events that happened that have an impact on global financial markets. This week was actually pretty crazy. So volatility was to be expected. There were a lot of important events. CPI data for the USA, federal funds rates decision. They paused, so no further rate hike. However, the FOMC press conference after the funds rate pause was pretty bearish in tone. So they made it pretty clear that they actually expect to do more rate hikes this year. So the tone was pretty bearish, so that's pretty bad. That's also why I expected a breakdown in the short term, which I tweeted about. I expected us to basically take out these lows over here, which happened pretty much immediately. So yeah, the tone of that FOMC press conference was pretty bad. Today we had the ECB in Europe making a decision on their interest rate. They hiked with 25 BPS, which is what the market expected. So non-event. Also, the ECB isn't as important as the Federal Reserve. So not really that important. Didn't really have much of an impact. Tomorrow, one more interesting data, Friday. The Bank of Japan is going to hold a press conference with some notes on their monetary policy. Bank of Japan is a pretty important central bank, so that could have an impact on financial markets. We'll see. And then currently we also have something crypto specific happening that's pretty important for us. There is some FUD around Tether. So there was a slight depeg today, which started with this curve pull that was getting imbalanced. So a big whale was swapping USDT for USDC, which made on public markets USDT depeg a little bit. As you can see, on most exchanges it depegged a little bit, but it also got bought up pretty quickly. And currently we're basically back at the peg. In my opinion, Tether is pretty safe. I'm not really worried about this. It just shows you that there are some market jitters. Also, if you zoom out and look at this depeg, in the grander scheme of things, it's not that significant. If you look at some of these previous wicks that no one even talked about, this one right here of today isn't that scary, to be honest. If you look at Coinbase again, look at this chart. Stuff like this happens all the time. So in my opinion, this slight depeg today isn't anything to be super worried about. But once again, it just tells you the current state of the market, which is also why I'm going to advise, or I'm not going to advise anything, right? But I'll tell you what I'm doing. I'm currently just sitting on my hands and waiting for the market to process everything that happened this week. But because this was a crazy week, right? Also, I want to see this stuff with Tether resolve first before I make any important decisions for my trading. So that's why I'm going to wait until this week ends. I want to see, does Bitcoin close above 25K or below? I want to see, does this Tether FUD resolve or not? Or does it get worse? Does it get better? I also want to see how the markets processes all of this stuff that happened, all of these important events that had an impact on global financial markets. So yeah, I'm just sitting on my hands. By the way, this is Forex Factory. If you don't know, forexfactory.com, pretty good website to stay up to date with all of these important events. And then final thing I'll talk about quickly about altcoins in general. Because of this stuff with the SEC, Robinhood has decided to delist certain markets. So they're delisting ADA, Matic, and Sol. So we can expect some sell pressure from Robinhood's customers that want to get rid of these assets. Also, today we found out that Celsius is going to sell user altcoins and swap them for BTC and ETH. So this will affect a bunch of altcoins. Their biggest holdings are Matic, ADA, Link, DOT, LTC. So you can pause the video for a moment and then take a screenshot of this spreadsheet if you want. But here on TradingView, I made a list real quick with the coins that get affected the most by all of this stuff, which is DOT, ADA, Matic, Sol, and LTC. So If you're looking to go long on certain altcoins, definitely keep this in the back of your mind. It's possible that these in the short term will underperform because of this sell pressure, because of everything that's happening with Celsius, Robinhood, and so on and so on. So yeah, currently market looking pretty sketchy. There's a lot of FUD, there's a lot of regulatory uncertainty. So yeah, in my opinion, just wait for this week to end and then we'll reassess. Keep an eye on this 25k level for Bitcoin. Super important, very key level. We don't want to see this breakdown. And that's about it. Thanks for watching. Like, subscribe, all that good shit, you know how it goes. And I'll catch you guys in the next video. Bye bye.